Now, the NSCC 002, what does it mean for me? What does it mean for you? Guys, a lot of speculation out there is saying that when the 002 is implemented, it's going to cause the margin calls that are going to cause the short squeeze, and it's going to be excellent. Well, I don't know if it's necessarily going to cause the margin calls, but it is going to be excellent. Why? What does it tell us? What does it signify that the NSCC is doing? They're preparing. What are they preparing for? They're preparing not to be the bag holders for all of the hedge funds' not so smart decisions of shorting stocks like AMC, shorting stocks like GameStop, so that they don't take the loss that the hedge fund has created. So let's talk a little bit more about it, get into a little bit more detail, what exactly it is, what exactly it means for us, and of course, if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and of course, we are growing our portfolios together. NSCC 002, man, it is looking good, okay? And like I said in the intro, it doesn't mean that this is a make or break it deal, that this is going to cause the short squeeze, but it is a step in the right direction. Why? They're tightening margin regulations. So what do I mean by tightening margin regulations? So the NSCC, you can kind of think of them as a middleman, as a clearinghouse, as someone or an institution that guarantees when the hedge funds short a stock, they're going to be on the hook for that stock. When you sell a stock, whoever you sell it to gets that stock. They make the transactions possible. So what do they need to have? They need to have enough liquidity to cover all of these transactions. Now, yes, if I go out and buy a stock, or if a hedge fund goes out and buys or sells a stock, we're responsible. Okay, I'm responsible for my purchases. They're responsible for their purchases. So let's talk about the hedge funds, because it's a lot different if I go out and I buy a small amount of shares or something. But if hedge funds are out there trading billions of dollars in securities, things can get a little bit sketchy, right? If they don't make up their end, if they go bankrupt, if they lose all that money, things can go south pretty quick. And the NSCC does not want to be on the hook for the hedge funds' losses. So let's say that hedge funds go out and they short an extreme amount of AMC, just like they've been doing. Well, the NSCC has to make sure that all of these different transactions clear. And if they know that AMC is trading at extremely volatile rates, if AMC is shooting higher in price when the hedge funds are losing extreme amounts of money, $4.5 billion worth of money, $45 billion worth of money, $450 billion. It's going to continue increasing as the price of AMC increases, how much money the hedge funds are losing. So why is this important for us? Right now, the NSCC only requires that they have this supplemental liquidity around options expirations. So once a month or so, when options are expiring and prices are a little bit more volatile than normal, they can go out and they can request supplemental liquidity from the different hedge funds. Currently, I believe it's the top 30 hedge funds or top 30 institutions that they can go out there and request extra liquidity for. Now, what does the new rule do? What does the new 002 require? It says that the NSCC can go out on a daily basis. Daily, not just once a month anymore. They can request this supplemental liquidity on a daily basis based on different market conditions. It doesn't have to be surrounding options expiries anymore. It doesn't have to be surrounding things like that. It can be based on market conditions and specific stocks like AMC stock. So, everybody's been noticing lately, GameStop, AMC, all of these other meme stocks like they call them, they're creating quite a stir for hedge funds who think that they're just invincible when it comes to shorting a position, or they can go out and they can buy a position and they're guaranteed to win no matter what they do. It's not the case anymore. And if anything that you get out of this new passing of 002, it means that the government, these clearinghouses, are recognizing. They are recognizing the risk that the hedge funds are taking, and they're saying, we don't want to be a part of it. We cannot associate ourselves with the risk you're taking on some of these stocks that you're shorting out there. We don't want to cover your losses for you. Sure, you can go out and lose all of your money, but we are not going to be held responsible for all of your losses. And why do I put it that way? So margin calls are essentially that. Margin calls say that the clearinghouse is not going to accept the responsibility for the institutions that are out there selling. That is what a margin call covers. So let's just use AMC as an example really quick. If the hedge funds, Citadel, whichever one you want to use, hedge funds in general, Citadel, it doesn't matter. If they go out there and they short an extreme amount of AMC, which they have been doing, and they seem to be losing a lot of money on it, as the volatility in AMC increases, the NSCC can now go out and tighten the margin regulations and require additional liquidity. That means additional capital made on deposit from the hedge funds that goes into the NSCC's bank, if you will. It goes into their fund so that they don't get caught holding the bag. The hedge funds will get caught holding the bag. So if they want to associate themselves with the risk involved in shorting AMC, they now have to provide the NSCC with more liquidity, with more money to say that, yes, we realize this is a risky situation. Yes, we realize we can lose all of our money, but the NSCC is protecting themselves. So guys, I don't necessarily know if this is going to cause a margin call, if this is going to cause the hedge funds to fold or to lose out and the short squeeze to occur. You know, I have to sit here and assume that the hedge funds are smart enough that they're going to know that, yeah, we're going to have to cover this increase in margin now. We're going to have to cover this increased liquidity, and we're going to have to put more money on deposit with the NSCC. You have to assume that the hedge funds are going to be able to calculate for this, right? Now, it might get a little more difficult if AMC becomes more volatile and the price increases. It could be an excellent thing for AMC's margin calls, knowing that it's based on intraday volatility now. So keep that in mind, yes. Also keep in mind that the hedge funds can do math and that they know how much money that they're going to need to be able to keep on deposit with the NSCC at any given time. So they will be prepared for that. But if you take anything away from the new rule change, a couple things. One, the NSCC is recognizing the risk out there, and the NSCC is saying that we will not be responsible for your losses. You're going to have to cover your losses on AMC. That is excellent. And two, a lot of people worry about what happens if the hedge funds go bankrupt. Do they still have to cover their short shares out there? Will they still pay us for the shares that we're buying? If the hedge funds go bankrupt, that's where the money in the NSCC comes from. That's why they're required to deposit additional funds into that, supplemental liquidity fund or whatever they were calling it. That's why they're required to do that, because the NSCC is on the hook. It goes on down the line. You will get paid. All right. So they're recognizing the risk. They're recognizing what we're doing here. And they're recognizing that the hedge funds have a very high likelihood of losing. If anything, glad you're still here 9 minutes in, but if anything, they're recognizing that the hedge funds are losing. So that is the key takeaway from this video. Hopefully you guys agree with it. Hopefully you're excited about it. We might not see some margin calls right now, but it does recognize that the hedge funds are losing. So guys, if that subscribe button is still red, make sure to subscribe to the channel. Join us, become a bro. We're here every single day, and we are growing our portfolios together. Webull, an excellent platform. There's a link in the description below for Webull. Make sure to sign up, deposit $100, get a couple free stocks, sell those free stocks if you want, and then of course, we're here to buy AMC. We're here to hold AMC. And yeah, that is the plan. That is exactly what we're doing. And let us know down in the comments below what you guys think about NSCC 002 and how you're holding your AMC. You got shaky hands? You got shaky hands? Or do you have diamond hands? Of course you got diamond hands. And let us know down there in the comments below. And I think that sums it up, guys. Look at all of the links in the description below. And until the next time, I hope that each and every one of you have an awesome day.